Players of the tea sector in Mombasa won the impulse between Kenya and key tea market nations resolved. East Africa Tea Trade Association Managing Director George Omuga says closure of some markets like Sudan has affected tea sales and prices, and there is need to source for alternative markets in the continent to reduce incidences of unsold tea.
The Kenya Tea Board latest data indicates that year-on-year tea exports in the month of August 2025 reduced by 6%. Players in the tea value chain say the numbers could further decrease if the government does not source for alternative markets for Kenyan tea to cover for the Sudan market. Sudan accounted for 15% of the total sales at the Mombasa tea auction, and there is need for bilateral agreements to resume shipments in the market.
The challenge in Sudan resulted in some of the teas, because they used to be packed in Kenya and written in Arabic, you cannot divert those teas. So when this problem occurred, it means the teas are sitting in Mombasa.
This as tea traders want talks between Kenya and Iran on increasing tea export volume to be fastened.
The noise has basically affected the trade because, you see, as the trade, it is our responsibility to make sure that farmers get value for their money.
Tea traders are calling for regional tariff reforms to ensure Kenya tea access additional African markets.
There are a lot of tariffs being imposed by governments, particularly in Africa. There's a huge market in Nigeria, Ghana, but the problem that we have is that the tariffs to enter those markets are the biggest challenge.
To increase local consumption and reduce the cost of tea production, counties are encouraged to harmonize their levies to reduce incidences of double taxation on tea products. Sylvia Gatti, reporting for KBC Channel 1.